Welcome to The Way of Wealth. I'm Corey.
And I'm Lily. Corey, this episode is really special. We're introducing some fascinating insights from a highly respected analyst in the English language precious metals space.
Right. Today we're talking about Alasdair Macleod. He's got over 40 years in the financial industry, with deep expertise in precious metals markets, monetary theory, and geopolitical economic analysis. He publishes ongoing research on his Macleod Finance Substack. On April 23rd, he did an interview with an English-language financial channel, and we're going to walk through some of his core ideas from that conversation.
Corey, before we dive into his views, I want to be clear about something. This episode is about presenting Macleod's analysis and perspective as accurately as we can. These are his views, not necessarily the position of the Way of Wealth.
That's an important distinction. Thanks for saying that, Lily. Our role here is to faithfully introduce this analyst's thinking to our listeners, giving everyone another angle to consider. Macleod's analytical style comes from the Austrian school. He takes a long-term pessimistic view of fiat currency systems and has deep research into the monetary properties of gold and silver. He's got significant influence in the English-language precious metals analysis community. All right, let's start with his most important observation: China's silver import data.
This data has been generating quite a bit of discussion in international financial media lately.
Macleod specifically points out a comparison he thinks a lot of people are missing. Bloomberg published charts showing China's imports this year hitting all-time highs. March alone set a record for any month on file, over 170% above the 10-year average for March. But what Bloomberg didn't publish alongside that was the change in China's silver exports.
What happened on the export side?
Macleod says that for many years, China has been a net exporter of silver. The numbers he cites are that China exported about 4,200 tons of silver in 2024 and around 4,083 tons in 2023. His core argument is that over the past several decades, China accumulated massive silver stockpiles and has been feeding that silver into Western markets, effectively suppressing international silver prices while filling the gap in global supply-demand deficits.
So in those years, global silver prices didn't surge even though there was a shortage, because China's stockpiles were quietly filling that gap.
That's exactly Macleod's argument. And he says this deficit has been running for at least 7 years. When that filling mechanism gets cut off in 2026 because of export controls, the market has to face the raw supply-demand reality without China's inventory backing it up anymore.
So the global silver market was basically being propped up by China's stockpiles?
That's Macleod's thesis. He says for the past 7 years, global silver supply has consistently fallen short of demand, but people haven't noticed how that gap was being filled. The answer is China exporting its long-accumulated silver inventory. Then, in 2026, the situation fundamentally changed.
What changed in 2026?
Starting this January, China implemented a licensing system for silver exports. Only officially approved designated companies can export silver, and silver has been formally listed as a strategic resource, same tier as rare earths. Macleod believes this signals that China has realized that continuing to export silver stockpiles is unsustainable, given the explosive growth in global industrial demand, especially solar and defense applications.
Corey, I notice Macleod connects this shift to geopolitics.
Yeah, he specifically mentions a timeline. Last September, China suddenly suspended rare earth exports because the Trump administration threatened major tariffs on Chinese goods. Then about 2 weeks after that rare earth ban was announced, the London bullion market's silver lease rates suddenly spiked to 40%.
40%. I need to put that in context. Normally, silver lease rates run around 0.3 to 0.5%, right?
That's the normal range. Jumping to 40% means there's an extreme shortage of physical silver available for immediate delivery. Anyone willing to lend silver was demanding an astronomical price. Macleod thinks this signal already shows how serious the problem is. Physical silver supply in the London market is facing real pressure.
Is he saying there's a causal relationship between China's rare earth ban and the silver lease rate spike?
He doesn't explicitly claim causation, but he thinks the timing alignment is worth noting. His interpretation is that China's series of moves on strategic resources accelerated the market's reassessment of physical silver supply.
Corey, He also mentioned the Shanghai silver premium issue in the interview.
Macleod says Shanghai silver spot trades at about 12 to 14% above international markets. He explains that importing silver into China requires paying roughly 13% VAT, which accounts for most of that premium. But his point is that even factoring in that tax, Chinese buyers are still willing to pay a bit extra to acquire silver, showing the domestic demand is real. He compares this phenomenon to how gold has been flowing from west to east, and says silver is now moving the same way, being absorbed in massive quantities by the Chinese market.
Corey, what's his view on the silver supply-demand outlook? Did he mention any institutional forecasts?
He did, and he's got some strong criticism of mainstream institutional forecasts. He says most institutional analysts are trained in Keynesian economics, and in their analytical framework, silver is just an industrial metal plus some speculative demand. They completely ignore silver's monetary properties and geopolitical dimensions. So the forecast they produce, in Macleod's view, systematically underestimates silver's upside potential.
Corey, did he talk about whether China's massive imports are backed by official strategic intent?
He's pretty direct on this point. He believes China's decades of accumulating silver stockpiles while exporting silver to Western markets was both a price control tool and a strategic reserve-building process. He says, when China suddenly tightened export controls in 2026, listing silver alongside rare earths as strategic resources, that signal indicates Beijing has assessed that the strategic cost of continuing to export silver now outweighs the benefits.
Corey, what's his view on silver's supply-demand outlook? Did he mention specific institutional forecasts?
He mentioned UBS's forecast, saying UBS expects the global silver supply deficit in 2026 to be around 300 million ounces, but UBS's price target is for silver to first rise to $100, then fall back to around $83 by March 2027. Macleod's reaction to that forecast is dismissive. He says these big institutions' analysts are all Keynesian trained. They fundamentally don't understand silver's monetary properties or the geopolitical dimension, so their forecasting framework is flawed.
What's his own view then?
Macleod believes silver demand now has two forces burning simultaneously, and these forces are almost completely uncorrelated. They're not the same group of people buying silver for the same reason. They're two completely different groups with completely different motivations, simultaneously rushing into the same market. The first force is industrial demand. He says this number is blowing through the charts, especially demand from solar, defense, and electronics applications, all surging rapidly. The second force is monetary demand from Asia. He says Asians have a deeper emotional connection to silver than Westerners because historically, the last time Asian currencies were pegged to a metal, it was silver. So Asian populations naturally see silver as protection against fiat currency devaluation. There's a cultural foundation for that. He says this wave of Asian monetary demand got activated after gold prices climbed to levels many ordinary people can no longer afford. When gold approaches $5,500 per ounce, many ordinary Asian savers naturally shift their attention to silver. This substitution effect is confirmed by data from both India and China.
With these two forces exploding simultaneously, where does he think silver will go?
Macleod says in the interview that he believes silver could reach $300 this year, possibly higher. His reasoning is that this isn't just a supply-demand issue, it's a complex situation involving three simultaneous dimensions: exploding industrial demand, awakening Asian monetary demand, and geopolitical maneuvering. Any forecast looking at only one dimension will underestimate this market's explosive potential. He's particularly critical of institutions giving $100 targets, then predicting a pullback. He says those forecasts are built on a fundamentally flawed assumption that this silver rally is the same kind of event as past cyclical rallies. In his view, this time is different.
That $300 target really surprises me. Even the most optimistic institutions don't seem to have targets anywhere near that high.
Right. This is far beyond any mainstream institutional forecast. Macleod's logic is that mainstream institutional models are linear. They divide the supply deficit by price elasticity and get what looks like a reasonable number. But he believes when three completely different demand drivers, industrial, monetary, and geopolitical, explode simultaneously, while the supply side is severely constrained by export controls and years of accumulated deficits, the price rise may not be linear but non-linear. Jump-like. That's the logic behind his aggressive forecast.
It sounds like his framework has some similarities to the paper-silver leverage collapse concept we're familiar with. When paper contracts can't be delivered, price discovery happens instantly.
Macleod's view is definitely quite aggressive. This is his personal analytical framework and perspective. In the interview, he also extended into a broader macro prediction. He believes Russia and China will inevitably implement some form of gold standard because the credibility of the fiat system is collapsing at an accelerating rate. He says fiat currencies will ultimately trend towards zero, while gold and silver are the long-term sound wealth carriers.
Corey, did he talk about stock markets in the interview?
He did. He describes current global stock markets as a credit bubble. He says what drives stock markets up has never been fundamentals, but credit expansion. Commercial banks continuously injecting credit into the financial system, inflating the nominal value of all financial assets. He says as soon as that credit expansion slows, the bubble will burst. He uses a historical case as an analogy. The German stock market in 1921 dropped over 90% measured in gold, but measured in the depreciating mark at the time, it only dropped a quarter. He believes when this round of credit bubble collapses, stock markets measured in gold could lose around 95%, while measured in depreciating dollars, they might only drop 1/3 to 2/3.
Measured in gold, down 95%. Measured in dollars, down only 1/3 to 2/3. That's the fundamental gap between fiat-denominated pricing and real purchasing power pricing.
Exactly right. That's the core of Macleod's entire analytical framework. He says when the credit bubble bursts, the dollar's own purchasing power will decline simultaneously, so the nominal price decline can't reflect the true degree of wealth loss. German stock investors in 1921 watched their account numbers drop by a quarter and thought their losses weren't too bad, but they didn't realize the measuring unit itself was rapidly disintegrating. This is exactly why he keeps emphasizing wealth should be measured in gold, not fiat currency.
Did he specifically say in the interview what ordinary people should do about this situation?
He says his Substack's purpose isn't to give specific buy-sell recommendations, but to help ordinary people build a thinking framework different from mainstream financial media and the investment world. He says at this historical juncture, now is not the time to speculate, but to seriously protect wealth. In his view, the tools for protecting wealth are very clear: gold and silver, the two physical assets that have truly passed the test of time in human history.
Corey, having heard all of Macleod's views, I have a feeling many of his core concerns are actually very close to what the way of wealth has been focusing on for a long time, even though the path and analytical tools he uses to reach these conclusions are somewhat different from the frameworks we're used to.
That's exactly the value of introducing different analysts' perspectives. Macleod starts from Austrian economics and monetary theory and sees the structural collapse of the fiat system. We start from China's policy moves and market data and see the structural supply-demand imbalance in silver. Two different paths, arriving at many common conclusions. If listeners are interested, they can go directly to Macleod Finance Substack and read his original writings, where there's more complete argumentation.
His analytical framework resonates a lot with the financial addiction concept we often discuss on the show.
That's exactly why we're introducing his views to our listeners. He starts from a completely different angle, with a different set of analytical tools, and arrives at conclusions highly aligned with what the way of wealth has been focusing on for a long time. An analyst with 40 years of experience in the English-speaking world, using his own language and framework, reaches the same landing point in this era of highly unstable fiat systems. What you can touch is what you truly own. Of course, these are his views. Listeners can check out his Macleod Finance Substack themselves to further understand his complete argumentative framework. Our job today is to bring this voice to the Chinese-speaking world, giving more audiences in the Chinese language sphere a chance to encounter this kind of thinking and analytical framework. If you can't touch it, you don't really own it. Bye.
Bye.